I've recently talked about a 5-minute strategy that could actually lead to make you hundreds, if not thousands of dollars as a complete beginner actually, and without any experience whatsoever. Well, I'm here with proof after that short that I shared that I've been able to make over $1,000 on a daily basis this week only, and today's Thursday, and I'm gonna share exactly how I've been doing this with very little risk, without investing more than 1 hour a day, and more importantly with a funded account, so that you can actually take advantage and make tons of money with someone else's money. So here we go. Hey everyone, this is Christian here on YouTube, and welcome to a brand new video for the channel. Look, today I'm actually psyched, and this video might be longer than usual, but trust me, after watching this video, you're not gonna need to go through any Forex training or anything like that. Obviously, in the content of this video, I'm gonna talk about some common terms that you already have in Forex trading. Maybe I'm not gonna go into details to what is a pip or what is a buy, what is sell, but I'm gonna teach you a very basic strategy that only needs 3 different things to do, and that is making me over $1,000 every single day. So with that being said, let's go ahead and dive right into it. All right, so the first thing that I want to do is to mention what I consider to be like the best brokers for Forex trading that you could use. And well, there's actually 3, but 2 of them are the ones that I personally use. And the first one is actually IC Markets. Is available in a lot of countries in the world, unfortunately not in the US, but if it's available in your location, I'm gonna have the link to it in the description of this video. But basically, this broker offers you CFD and Forex trading, and the best thing that I actually like in regards to this broker is the trading platforms, because you can actually use CTrader, which I consider to be the easiest trading platform in Forex trading. So definitely go ahead and take a look at it. But in addition, is a highly trusted broker. It's been in the market for like 10-20 years or something like that, and it's fully regulated. This is my favorite broker of all. And the second broker that I can recommend you is this one right here called XM. This is a very low deposit broker, as low, if I'm not mistaken, it used to be $5 as a minimum deposit. Now I think it's like $50 or something like that, but still pretty low deposit. Now the only downside that I have in regards to XM and IC Markets is that XM does not have CTrader, but it does have MT4, MT5, web platform and stuff. So I believe both of them are actually super cool. In today's video, I'm going to be using CTrader, but you can do this with MT4, MT5, with any platform you want to, as long as you know how to dominate it, which I'm going to teach you exactly how. But these are the 2 brokers that I recommend. I'm going to have the link to both of them below in the description of this video. And the coolest part is that they do have a demo account, so you can actually start testing it. And then, I don't know, maybe you want to do real money. All right, now it's actually time to talk about what is scalping trading. If you actually go to Google, you will find some definitions, which I want to read aloud. It says, scalping is a trading style that specializes in profiting off of the small price changes and making a fast profit of reselling. Scalping requires a trader to have a strict exit strategy, because one large loss could eliminate the many small gains the trader worked to obtain. So basically what it does, like scalping trading, is fast trades. It's not going to be like day trading where you're going to wait for 8 hours for the trade to expire. No, it's actually pretty fast trades, but you need to close your profits quite like fast. Okay, so let's say that you put a short position, starts to go in the profit, boom, you close it, and that's it. But you gotta like be looking at the screen, because if you don't, then the loss, I mean, it could go in the opposite direction and you can lose like bunch of profits. Now, according to the definition they have right here, it's like one loss can actually make you lose all your profits. And as true as that is, I recommend you to actually have some risk management, which I'm going to teach you today. And so that even if you lose a couple of trades, you can still recover and make tons of money. But that's the real definition. But in easier terms, basically, scalping trading is fast trades. 5 minute, 1 minute candlesticks, and even 15 if needed. And that's pretty much it. You're not gonna spend 8 hours a day in front of a computer. So if you're an actual day trader that don't have or don't want to spend more than 2 hours or even more than 1 hour in front of a screen, this is the strategy for you. Now, enough talking, and we're gonna go through these strategy settings. I'm actually gonna open a brand new chart right here. And this is, again, C-Trader with IC Markets. I'm trading with a funded account with FTMO, which, by the way, best funded account company in the world. I have tested it for a long time and they are really good. So I'm gonna have the link to it in the description of this video to that funded account. You can get up to, I think, $300,000 or $500,000 account funded so you can trade and make money with someone else's money. But the most important thing that you need to understand is that FTMO has C-Trader as their trading platform. So that's the reason why I chose it, because I use some of their funded accounts, but this one has the C-Trader, which is the platform I'm looking for. So that's the reason why. But getting back to the actual C-Trader platform, this is what I have. Now, me personally, I like to have a clean screen. So the first thing I'm gonna do is actually switch to 5-minute candlesticks. That's the first thing. Second of all, I'm gonna right click on it and I'm gonna go to the color options. And on the background, not the background, but the grid, I'm gonna select transparent. That way I don't have like those little squares in front of it. Second of all, I'm going to eliminate the volume. Okay, the volume. This is the tech volume, I'm sorry. I'm gonna go with transparent again. There you go. I don't have anything. It's just like the chart and it says FTMO at the background. I don't care about that. But this is how you should have your chart. Now, the next thing you're gonna do is that you're gonna add 3 different indicators. The first one is actually the moving average, the simple moving average. You're gonna go to trend, or you can just type in moving average and you're gonna see bunch of. Be careful. You need to have the simple moving average. Simple moving average. There you go. If you're gonna be using this on different websites or systems, it's SMA, right? Now, you're gonna go ahead and choose the period of 50. And in my personal case, I like the color white. I like to give it at least 2 of thickness so that, I don't know, it just makes me feel more confident. So there you go. There you have the moving average. That moving average will actually determine the trend of the market. For instance, when you see that the moving average is actually above the candlesticks and going down, that is a downtrend. When you see the opposite is below the candlesticks and is going up, that is an uptrend. So hopefully that makes sense. Now, the second indicator that you're supposed to find is actually right here. You go, you right click, you go to indicators. That's the way I do it. I think there's another option to, oh, there you go. Like click it right here, it says indicators, and then you can choose it, but I don't know. I'm used to just right click on it. Then you actually are going to type in, where is it? You're gonna type in relative strength index. If you type in RSI, it's gonna give you the same. RSI is this one right here. So you click on it, and this one right here is actually quite tricky. You only need one level. You don't need the 30 level and you don't need the 70 level. You just need the 50 level. So we can just ignore this one right here. This is the period. We don't have to change that, and we click OK. There you go. And now we need just one more indicator, and we right click on it, and we're gonna go right here, and we're gonna type in stochastic. And there you go. It says stochastic oscillator. You see it? You click on it. And now the periods and the pretty much the numbers, you gotta change these. This is number 9. No, we need 14. This is the period. We need 3 as well. 14, 3, and 3. Other than that, you don't need to change anything. You click OK. There you go. Those are all of the indicators that we need for this specific strategy. So what is it that we look for in this specific strategy? We're going to look for a trend, and then we're going to look for retractions on the trend. Okay, so this is an uptrend. So we're going to look for this retraction. Then we're going to look for this retraction. And it jumped a lot. This retraction, it jumped a lot. This retraction, it jumped a lot. Maybe this, I don't know, it's kind of too much. Then another retraction, another retraction, another retraction, another retraction, and right now it seems like it's dropping. Now, what is it that we need to do? We need to enter on those retraction moments against the trend, meaning if it's an uptrend, the retractions are, or the pullbacks are actually going to happen going down because it's an uptrend, right? So we're looking for buy positions. So we see that the price is going up and up and up, and then eventually it just retracts a little bit. That's the retraction that we're looking for. We're not supposed to enter when the price continues to go up. No, we need to enter in the retraction moment. So meaning this one right here. Let me just go ahead and switch the color though. Meaning this one right here, this one right here, this one right here, this one right here, this one, this one, this one, this one, this one, and this one I would have entered too. So you can see how many opportunities we have to enter in that specific pair. Okay, so what is it that you do? Again, you enter based on those retractions. Okay, now what if it's a downtrend? Well, you do the exact opposite. So you're gonna enter not here, but here in the retraction, here in the retraction, here in the retraction, here in the retraction, and so on. Now, what is it that you need to understand with this specific strategy? That even though it's a continuous trend, there's always going to be options, or there's always going to be pullbacks inside of the market. Now, today we had some high volatility news on USD. So we saw a pair going up and up and up and up for like 30 minutes. That's okay because there were news going on. But if there are no news going on, usually the market behaves this way. Even if it doesn't, if it behaves like it's happening in this area, we just don't trade and we look for a new pair, right? But that's exactly what we're looking at in this specific strategy, okay? So just trying to recap slightly. We're gonna go with the trend and we're gonna wait for pullbacks in order to enter. Now, this is actually super important when it comes to this strategy, and is that every single trade or every single setup has a trading zone. And that trading zone is actually going to determine what would be like the area where you're supposed to enter. So the way you determine that trading zone is by actually having a rectangle. I don't even know if you can actually like draw something here. All right, so I don't even know if this is possible. So I'm just gonna have to use my drawing thing right now because I don't wanna waste that much time. So look, whenever you actually see a trade going with an uptrend, you're gonna realize that there are going to be moments when the price is actually gonna reach a level and then retract, right? So you're gonna realize that, for instance, here is a good support level. Maybe it was broken. Here we have another support level, okay? So what is it that you do? You need to look for trading zones, okay? Trading zone. What is a trading zone? Basically, you will need to determine what will be like the area where you can trade with this pair. Now, let me just go ahead and get trading view in order to explain you this. All right, so let's take a look at this trading area that we have right here. I'm gonna click on play because I did the replay real quick in order to have, there you go. So this is a resistance level right now, right? Once it actually gets broken, this becomes a support level, correct? So this is where you're gonna enter the position. Why did I draw the trading zone? You might be wondering, hey, but how do you know that's a trading zone? Well, that's actually pretty simple. As you can see, these candlesticks right here determine where's the resistance lie without the wick. And it was respected once, twice, maybe 3 times. Now, obviously, it's not respected 100%, and we're not looking for sniper entries in this case. We're just looking for behaviors of the candlestick so that we can follow that pattern and make money in the movement that is doing. We're not looking for sniper trades in this strategy. So once you actually know that, then you can actually enter your trade. Now, one thing I do want to say though is that with this strategy, I don't actually have pending orders. All right, I just enter immediately because we're looking at fast trades. But take a look at this trade right now. It went to the level and boom, it won it. 2.0. That's it. I don't recommend you to go 3.0, 4.0 risk reward ratio. No, just go with 2.0. You're going to be good to go. Those are fast trades. Okay. So as you can see, this was a good entry level, right? So that's exactly what you need to continue doing when you're trading like this in the market. For instance, in this area right here, I do see a support level. Now, once you actually have the trading zone, what is it that you need to confirm that you can enter a trade? Is this little baby right here, core RSI? Is the exact same RSI that I drew before, but this time is in trading view, but it's the exact same thing, okay? So what is it that you need to do? You need to understand exactly when the RSI gets actually touched, then you enter the position. Right there, boom, it touched. Do you see? Probably you didn't see it because it touched barely and then it got closed. But at the moment that it dropped, I would have entered here. The stop loss, I'm gonna explain you about the risk management in just a little bit, but you get the point, right? So you want to trade 2.0, maybe 1.1, because you gotta close it manually, right? And then that's it. There you go. Boom. It won it. 2.0. So what you need to understand is the perfect entry moment of the trade is when the RSI is touching the 50 level. This one right here. Okay. So when it touches, then you enter. Now, another way to confirm this entry point is by going into 15 minutes. And you're going to realize that, first of all, the trend has to be the same in 5 minutes and in 15 minutes. If in 15 minutes is in downtrend and in 5 minutes is an uptrend, then you're not good to go. For instance, right here, I can go ahead and enter a position. I'm going to go with stop loss in 1.0540, pretty much, right? Oh, shoot, 1.0540. So it's 18 pips. I think it's too much. Maybe 45. 13 pips. All right, so minus 13 pips. I'm gonna just reduce the lot size because I don't want to risk at the moment that I'm explaining, but then you go 2.0, 28 pips in profits. So what is it that you do? You simply enter the trade. Why am I entering the trade, you might be wondering? Because I see that in 15 minutes, it's almost touching the RSI. So the stochastic is looking like to bend over. New candlestick is started to form literally right now. And in 5 minutes, it's even below the RSI. So the candlesticks are mostly going to respect the longer time frame than the small candlesticks. For instance, the 50-minute candlesticks will be way more respected than the 5-minute candlesticks or the 1-minute candlesticks. Does that make sense? So that's the way you're supposed to enter the confirmation of 50 minutes and 5 minutes. I'm not talking a lot, but just try to follow the lead. Now, while this trade actually takes place, and let me just go ahead and do something real quick. So while this trade actually takes place, let me just go ahead and show you today's numbers. So just today, I was able to make $1,130. And let me show you something. $1,130 minus or plus, because I entered three positions actually at the wrong place. These ones right here. It was supposed to be sell positions, but I entered buy. So minus plus 67.87 plus 1631 and minus 194.59 because that was the, I don't know, I just won one buy position for some reason. So as you can see, I made $1,000 today. $1,000 just today. And if we go to yesterday, I made $398, but I was trading like during night pretty much. And if we go to current week, I've been trading 3 days only. I've been able to make $2,519 in profits. Now, that's a 2.5% balance increase in 3 days. Now, in these days, I also made mistakes like entering a buy position instead of a sell position when I was supposed to buy. You know, like pretty much there were mistakes that I wasn't focused enough because I was actually looking at the charts. And since these trades are actually super fast to take, it's kind of complicated not to make some mistakes here and then. And plus I was trying to like record the screen and stuff. But as you can see, these are my results so far. And these are not just results that are lucky, because lucky you can be one day, but 3 days you're not going to be lucky. Okay. So yeah, this is the way I'm doing so far. Now, I want to explain my best entry points with this current strategy, with this current setup that I have. And as you can see, I actually enter live positions, like literally right here, I'm entering live. And the reason why I'm actually entering here is because I got 3 confirmations going on when it comes to this setup. One confirmation, is it an uptrend? Yes, kind of in 5 minutes, but if you go to 15 minutes, yes, it is an uptrend, right? If we go back to 5 minutes, is the RSI above the 50 or is below? It's below. That's actually good, right? Because it's likely to start jumping. And in 50 minutes, it's almost touching the level. Now, third confirmation right here, the stochastic oscillator. When the stochastic oscillator crosses up, the green line crosses up, it basically means that the price is going to jump. When it crosses going down, it basically means that the price is going to drop. So right now, it already crossed. Do you see that? It already crossed. So if it already crossed, it's more likely that it's going to start jumping in 5 minutes. If we go to 50 minutes, guess what? Boom, it's preparing to actually start jumping. So what you're looking at right now is the different and multiple confirmations that this trade, it's likely to go up. It's guaranteed? No, it's not guaranteed, but it's very likely to start going up. So I entered 3 positions with very little risk, and we'll see how this one actually goes at the time I'm finished with this video. Now, here's the most important thing in regards to this strategy, and it's risk management. And this is probably the main reason why I'm trading with C-Trader and not with MT4 or MT5. Is because with C-Trader, you got this option. You create a new order, and when you click on the stop loss and the take profit, you can literally see all these data. How many pips? You select the closing price, right? If it was a stop loss and take profit. But you also see this, the percentage that you're risking and the amount of dollars. So whether you're like trying to risk a dollar amount or you're trying to risk a percentage amount, you're good to go. Because you can actually understand exactly how they're doing it, okay? This is a new trade that I'm gonna enter. Just don't pay attention because I'm taking advantage of the opportunity right now, literally. So, C-Trader will allow you to actually see all these things. So if you notice, I'm not risking more than 0.5% of my balance on every single trade. Not more than that. And you should not like risk overall more than 5% every day. If you can do 2%, you're good. I have 4 positions here, and in those 4 positions, I don't even think I have like close to 2%. The other ones are 0.13%. 0.13 times 3 plus 0.33. I'm risking 0.72% right now in all of my trades. So that's what you should be looking at. Don't risk more than 2% on every setup. With this strategy, you don't really need to actually like trade with 20 different pairs. One pair can do all the difference. Because if you're risking 1%, that means that you can make 1%, which is $1,000 out of my $100,000 account, funded account. Does that make sense? So again, don't risk more than 2% on every setup and stop. If it goes in the opposite direction, you lose it 1%, then just go ahead and stop. Okay? But that's the reason why I recommend you to use C-Trader. So by the way, if you want to use C-Trader with a real account, all you got to do is go to IC Markets. The link is in the description of this video. And if you want to get a funded account with C-Trader, go to FTMO. It's right here. I'm going to also have the link in the description of this video. Which actually brings me to this bullet point that I wanted to mention is in regards to FTMO. For those of you who don't know, a funded account is basically a company that allows you to prove whether you're a good or bad trader. And if you're a good trader because you pass a challenge, they actually give you like a profit target and stuff. And if you actually are able to show that legally you can actually trade and make money, then you can actually get a funded account. Let's say $100,000 in a funded account. And then you can trade with that company's money. And let's say that you make $10,000. Then you're able to withdraw up to, I think, 90% or 85% of the profits to yourself, and the rest goes to the company. So that means that you can make over $8,000 of profit out of that trading month. Now, these companies are very popular nowadays, but very few are trusted. And I only recommend you two. This one right here, which is FTMO, and this one right here, that is E8 Funding. Those are the only two companies that I have tested that have paid me when I make money with the funded accounts. Unfortunately, First Class Funds, my Forex funds, and all of those companies are quite scams, all of them. So if you actually want to join a trusted funded account, I'm going to have the link to both of them below in the description of this video. Highly recommend it if you have very little capital, because you can purchase like a funded account with like $200 and you can get a $25,000 account. So it's way better than trading with those $200. Hopefully that makes sense. There's one more thing that I want to talk about in regards to like technical stuff, and it's in regards to the spread. I'm trading with Euro USD right now, and you're going to realize that there's something like kind of different. If you actually go and enter the order menu, you're going to realize that it says the spread is 0.3, 0.5 and stuff like that. And the spread is this little like green number right here. Right now, the spread is very little, but the orange number is like the real number. But the spread is a few pips above. For instance, if I enter right now, the real price is 5530, but I would have entered at 5533, 5532. Why is that? Because the broker has a spread. Okay, so since we're actually trading with shorter time frames, it's actually way easier to make mistakes of entering a position, let's say at 300, and then instead you enter at 3001. So with this, it's actually super important that you control your stop loss. One thing that I do, as you can see, is that I actually set like a stop loss that is not too far away, but not too close either, so that I have enough window, whether if it drops to the stop loss, I mean, it basically the setup was wrong and I made a mistake. But if it doesn't go that far, it's just gonna start jumping. So I'm safe, and I control that with my lot size so that I know exactly how much I'm actually risking right here and how much I'm gonna lose. This, you don't need to change it with the stop loss level. The 14 pips in stop loss are perfect. What you need to do in order to change this percentage, for instance, if I trade with 10 lots, that means I'm risking 1.35% on my balance. But if I actually, I want to trade, I don't know, with 0.5%, then I can start looking for, okay, what would be like the level? There you go, 3.5, 3.6, 3.7, and boom, I have 0.5% because I'm changing the lot size. I'm not changing the stop loss and the take profit. So hopefully that makes sense as well. Now, how many trades should you place per day? And you can see in my history account that only today I placed 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 minus those 3 that I made by mistake, that means I placed a total of 9 positions. 9 positions in 2 different pairs. The point is not how many trades you're going to be placing, is how much you're going to be risking. So if you're entering one position with 0.5% of your balance, then don't enter more than 4 positions, right? Because that's 2% of your balance. But if you're trading with 0.1%, you can enter 10 positions, and that's just going to be 1% of your balance. Does that make sense? One thing I recommend you is that play around with the trades. Like, look, if you're actually entering like many positions like myself, if it starts jumping, I can close a few and make profits no matter what, and then wait for the other ones to see if they make money. another thing I can do is if once it actually starts jumping, I can move the stop loss to the entry level so that I'm risk free, close on positions so that I still make some money and wait for the take profit, or I can close them all. It's really up to me. But if what I'm actually looking at is to make more and more money, to diversify, what I can do or what I should do is to actually have many positions like in a different level. So 1, the highest, then 2, 3, 4, 5, and so on. So the lower the level, obviously I'm looking for a buy position, then the more profit that trade is actually going to do. So hopefully that actually makes sense. It's not about how many trades, it's about how much you're risking on the entire setup per se. And hey, I want to finish this video by just thanking IC Markets and XM. Honestly, those are the two brokers that I've been using for years when it comes to Forex. Also Black Bull Markets, but not that much. But IC Markets is by far the number one. And then XM, I use it with some other auto traders and they work like a charm. So I'm going to have the link to both of those brokers below in the description of this video. And it's actually super important that you understand. I'm not affiliated with, they're not sponsoring this video or anything. The links are affiliate links in case you want to help me out by opening an account using those affiliate links. But they haven't sponsored this video at all, but I trust them like a charm. So if you want to use the exact same brokers I'm using, you can do so. The links will be in the description of this video. If not, continue to use your trusted brokers. As long as you can withdraw money, you're good to go. So yeah, that's pretty much it. Hey, so thank you very much for watching this video. If you enjoyed the content of it, make sure you smash the like button. And more importantly, if you have any questions or comments to share, you can always use the comment section below and my team will be happy to reply to you. So thank you very much for watching this video, people. I'll see you next time. Peace.